so they issued more MSTR common shares. Interestingly enough, they mentioned that these weren't completely settled. Maybe that's something that we want to discuss a bit later. On top of it, they also mentioned this BTC monetization, that they would be willing to sell 1.25 billion worth of Bitcoin. And basically that would bump their coverage to 25.9 months. That's an interesting one. I've been receiving calls again from friends who are like saying, hey, why is seller willing to sell more Bitcoin? Again, something we can deep dive a bit later. STRC had a dividend rate increase, so from 11.5 to 12%. I think that was pretty much expected by all the market participants that were watching this product. And then 2 points that were also interesting is their digital credit repurchase program and their MSTR common share repurchase program. And this is something that could also be done theoretically through the Bitcoin monetization program. I think that's how they also called it. Yes. And I think these 2 points, as far as I understood, is kind of reiteration of things that they had mentioned previously in the quarterly earnings. So these are probably not as new, but still communicating to the market. And all of this actually also comes with some new governance. Most of these things are now the board of the board now has to approve some of these changes. For example, the USD reserve is only for dividends. And if they wish to change that, then the board needs to have this approved by as an exception to policy. And I think with that, that's more or less all the news that came yesterday from strategy. I don't know if there's anything I missed, but yeah, I think there's a few things to pick here and there, and we can get into the discussions.
Yeah, I think I would add to that this is guidance that we haven't seen in a while, but not only guidance on just kind of MSTR issuance, but really all of the various levers that have been, hotly debated on Bitcoin X lately. I think it's worth calling out that yes, these are policies, these are corporate governance issued policies now, but the reality is Michael Saylor controls the board. And so in a moment's notice, any of these levers can still be pulled. So really, I look at this more as guidance than policy, just because of the nature of, Saylor's dominance and Fong Li's dominance and their combined alignment in the decisions that are made at strategy.
Yeah, it's interesting stuff. It's stuff we talked about in weeks prior, especially last week. Talking about really ramping up. I think you were kind of hammering on that, increasing the runway for the USD reserve. It seems like the team at Strategy had heard that signal. Seeing how digital credit had performed since they rebought those convertible bonds. Famously, I guess what was it, the end of May, when they retired $1.5 billion of converts, and now they're back up to about 17 months of dividend coverage. So it's pretty astonishing, again, in a Bitcoin bear market, to see how quickly they can, refund that dividend reserve. They were down, to about 7 months of dividend coverage. Now they're at 17 months. So that, within a month, less than a month, they were able to stack an extra, 10 months buffer. And I think we see that continue. They've signaled in this policy they'll maintain, like you've said, at least 12 months of runway. And we've talked about, Chase, I think you said, 4 years, 4.5 years might be that magic number, that sweet spot eventually that they should get to for runway on the dividend coverage. Do you still think that's like the best place for them to land eventually? And do you think this digital credit framework that they announced on Monday gives you any indication whether or not they will increase the USD reserve much beyond where it sits today?
I think they're kind of doing small steps and watching how the market responds. But just as the takeaway was negative when they sold down the USD reserve to pay back the convert, the market responded very positively to this. Even MSTR price, which I just want to call out as very interesting, because the assumption from folks on the outside who maybe are not MSTR shareholders but are worried that or, you know, whether genuinely worried or, you know, liking to rag on MSTR shareholders, they often talk about MSTR shareholders as holding the bag and kind of being the doorstop and getting diluted to make good for the STRC dividend obligations and the other preferreds. But what's interesting is MSTR responded very positively. I think it was up over 12% on a day when they announced that they issued more MSTR to raise cash. And so you have to ask yourself, wait, hold on, isn't that the most counterintuitive thing? Isn't that the lever that MSTR shareholders would want the least? Like, if you're going to issue MSTR, it's to buy Bitcoin, not to raise the USD reserve. But I think the people who are holding MSTR understand that the long-term strategy is based on the credit worthiness of the company, and that raising the USD reserve increases the credit worthiness. And so one thing that I'm going to be looking very closely at is, does MSTR price start to follow STRC's price approaching par? So for example, do people get more bullish on MSTR the closer STRC gets to par? Because that signals that, hey, strategy might start accumulating more Bitcoin again through its most efficient means, the STRC issuance, when we're above $100 par. So I think it'll be very interesting that kind of MSTR shareholders are almost cheering on a USD reserve because of the second order effect that it has in allowing STRC to break back towards par and then reignite that accumulation engine. So that's something that I'm looking at. I do think 5 years is the right amount for them to ultimately settle on. I can understand why they might set a floor of 12 months now and then raise the USD reserve to 2 years and then establish an updated guidance that now it's going to be 2 years, and that they would kind of take it that way. But I think 5 years is right, because you want to convince and reassure basically fixed income investors holding STRC that, hey, no matter what Bitcoin does over a traditional 4 to 5 year Bitcoin cycle, we have liquidity, we're good for it. And you know, even people in the outside of the Bitcoin community know that this is a long-term asset that you really have to hold for 4 to 5 years to see the appreciation. So I think 5 years is where I would like them to end up.
Yeah. What about you, Quentin? What do you think about? How do you think about run? Oh, I'm sorry, I called you Quentin again. Yves, my
Easy.
man, I'm so sorry.
All good.
The One Chair Pod guys, you know, they're one
Too many French
entity.
names. Too many French names.
One chair, one name.
Well, exactly. Yeah. No, I think I don't know if 5 years is a bit much. As I mean, looking at it, but right now, definitely the market seems to price in a higher, at least USD reserve, and they appreciate that. We saw, as Chase pointed out earlier, the market really bounced back on these news, even the MSTR shares, and I think it goes that to show on the MSTR shares, at least that's how I perceived it, is the success of STRC allows the success of MSTR at the end of the day, right? So if STRC goes back to par, obviously I would expect the MSTR common share to do well, just in general, and hopefully see some big pricing increases going forward. It's going to be interesting to see how they go forward from this, right? Because we saw Strive this week saying, "Hey, we're not doing anything," and I thought that was a great move. And looking at least how things are happening in the market, how the sentiment is on Bitcoin and MSTR currently, I don't know if making any sudden moves makes any sense for MSTR. I would probably like to see maybe a bit less moves, and if Saylor could copy again from Strive's strategy and say, hey, maybe it's time to see and wait what happens in the market. I think that would probably also be interesting for the market participants to see where the MSTR share moves.
Yeah, I think one other point on this idea of perhaps we start seeing MSTR price follow STRC price approach par is not just that as an MSTR shareholder, it means, you know, you're going to start accumulating more Bitcoin per share and all of all of that dynamic. But in general, you have to be looking at this bear market and saying, it's hard to see what's going to flip us and pull us out of this bear market until strategy can start buying again. And that perhaps STRC approaching $100 par, and as we get closer and closer and we inch closer and closer, it's telling the market, hey, that big buyer is probably going to be re-entering the market soon. Perhaps Bitcoin price is going to start climbing out of bearish sentiment, and therefore MSTR has a lot of upside, even in the near term. So I think that there's some of that dynamic just in the market as a whole, is looking at who's going to be the big buyer now that strategy is not a net buyer, that is going to help us get back to previous all-time highs.
Yep. No, yeah, that's a really good point. And, it's one of those things, like, it's amazing to see when strategy was buying at scale, this year, as Bitcoin's price was still chugging down since its all-time high in October, that the price, there were times it did go from 60 to the low 80s, but there were times, strategy was buying 10,000 coins in a week, 20,000 coins, and Bitcoin's price didn't have major, action, as a result of that news. It's always tricky to pin down exactly why Bitcoin's price is moving. But now, with STRC being, 15% off par, and that's a clear signal that, strategy is not going to be buying anytime in the next, week or two or three. And, the longer this persists, the less, strategy is going to be in the market buying Bitcoin, of course, like you said. And to see Bitcoin's price, it's held up relatively well, since it was in the 60s, we're sitting at 58,000 today. So it's really interesting to see, like, I can't ever, like, explain really the price of Bitcoin. There's so many forward-looking movements. There's probably so many derivatives traders, expecting these moves and just, like, front-running the market that it's hard to make sense of. But, when in doubt, zoom out, right? And look at the long-term analysis. Chase, what was like the most important signal that you took away, I guess, from Strategy's new digital credit framework? Is it the USD reserve? And I guess, how interesting is the Bitcoin monetization program? Them reiterating again that they're willing to sell Bitcoin, to defend the stock prices.
For me, the most interesting thing was the policy inside the USD reserve, where they stated that the USD reserve will only be used. And again, this is policy that can be changed upon board approval, which can happen in 2 minutes if they really wanted to. But the stated policy and the guidance that they'll obviously receive backlash for now, almost 2x the backlash for selling down the USD reserve the last time, because now it's explicit guidance. But the new policy is that the USD reserve will only be used for dividend obligations or other indebtedness. So basically things like converts. And so I think that that's the most meaningful, because that really was the purpose of the USD reserve. And I feel like to some degree, the strategy team got greedy with the optionality that they have at their fingertips. And they said, oh, maybe some days we'll use the USD reserve to, buy back MSTR stock, or we can do X, Y, or Z, or maybe if Bitcoin is cheap, we'll buy it. And we'll just tell the market that we're a hedge fund, and we can basically pull any lever we want at any time. But that was never the purpose of the USD reserve. There's a reason that they followed Strive in pursuit of the USD reserve, which is that Strive was, perhaps having more conversations on the ground and realized, hey, this puts that dividend recipient at ease. And, they're not put at ease necessarily just by the strength of our Bitcoin balance sheet alone. They need to see the liquid USD reserve. And so this is a good signal that strategy has heard the market, and perhaps it might be a year or 2 years from now that they forget why the USD reserve is there and they get itchy and there's an opportunity in the market and they want to touch it again. But I do believe that, at least for the next year or two, we're probably looking at a USD reserve that is explicitly for dividend obligations.
Yeah, that's a good point. And you did mention they do have the optionality still to retire indebtedness, which right now is just, all the converts that are sitting on the balance sheet. Taking a look here at their metrics from their website, there's about 6.7, or no, is it, sorry, 6.7 of notional convertible debt. I'm curious from both of you, and Yves, maybe we can start with you. What does like the perfect world look like as strategy looks to retire the convertible debt if it's not trading in the money and isn't converting to stock? How do you think the best way to retire this is in the future, like learning from what they did, here in the past? Is it waiting, till they're about a year out, till they're about 6 months out? Is there an approach you'd like to see? Because we're still 2 years out from the next, convertible bond maturity. Of course, they can always refinance. And I'm curious your take on what's the best course of action for strategy as they look to retire that or refinance it.
Yeah, that's a great question because I've been thinking a lot about that, right? How do we move away from the current balance sheet that strategy has? We want to have this pristine balance sheet, like striving, pun intended, to going towards strive, right? And I think all the overhang, there's not only the converts. I was also thinking about STRF, STRK, and STRD at the end of the day. I think in some sense, just getting a lighter balance sheet makes really sense. I don't think depleting the USD reserve is the right way. I think this is clear, right, based on the last move that they did. I don't think currently issuing more shares, so common MSTR stock to get like repurchase those even at a discount, right? Because they also managed to get it at the last convert at a discount, which I think was good. And I think probably it could be good long term, but there's so many narratives right now. I think in any case, what we need is Bitcoin to start going the other side and have a sentiment shift. That's the first thing. Right now, I don't think strategy should be pulling many levers. As I mentioned before, I would like to see them just keep cruising and wait and see. They have a lot of Bitcoin. They're still way ahead to any competitor. They still have so many optionalities. They can just wait it out, in my opinion. So first thing, we need to have this sentiment shift for certain, and then we can start looking at how they would do it, right? I would like to see obviously the most expensive converts get taken out as quickly as possible. And assuming we have a premium to MNAV, then potentially also doing it with the commons. I don't want to see too much USD reserve personally. I know Chase mentioned that he would like to see 4 to 5 years. I think probably 18 to 24 months, in my opinion, is already good enough. But I wouldn't like them to hold so much cash. I still think that's the riskiest of the things that they hold. And so, yeah, basically in a bull market, I would start just taking these things off as soon as possible. Even if they don't acquire so much Bitcoin, just having this pristine balance sheet will help them later to issue potentially more STRC, and without having too much issue and seeing more accumulation down the road. But again, this is obviously theoretical. And yeah, I would be also curious to hear your guys' takes, so Tyler and Chase's on that one.
Yeah, do you have thoughts on that, Chase, about how they approach retiring the current debt? And I guess, yeah, is it something they can do piecemeal, like when it's trading at a big discount? Does that make much sense when Bitcoin's your hurdle rate and it's accumulating, as Saylor says, 30% a year for the next decade, 2 decades?
I think if you look back to the move to retire the converts last month, it is logical because from their standpoint, if you think about it as like an engine room with, or, all these different monitors, what are they ideally looking for as far as timing to retire the converts? They're looking for the converts to trade at a discount and for MSTRs to still be trading at some kind of a premium so that they can issue MSTR to raise the capital at a premium to pay down a discounted convert. The problem with that, though, is that for the converts to trade at a discount, it probably means that there's, other alarm bells going off, like STRC not being held at par, for example. And so from the STRC dividend recipient, logically, using the USD reserve to pay down a convert, which is higher up in the capital structure, is kind of one-to-one because they retired, and yes, they used the USD reserve. Let's call it the 1.3 billion or so of USD reserve at the time, but they also basically removed 1.3 billion worth of obligations that were higher up in the preference, higher up in the waterfall of preference in the capital structure. So to some degree, you could imagine that maybe they thought STRC would respond positively to that because they're like, look, we don't need the USD reserve. We still have 6 months or so of USD reserve remaining, and we just knocked off basically one of the seats in front of you in this capital structure. But clearly, the STRC fixed income investors are just not thinking at the level of nuance and detail that maybe Strategies management is thinking at. And I perhaps wonder if the risk there is that Strategy is so in the weeds, looking at these models, looking at how pulling this lever affects that lever, that they're forgetting that the STRC shareholder is basically just somebody who doesn't trust Bitcoin enough to just hold Bitcoin and wants some fixed income at a high yield and just basically wants to know that they're good for the money. And anything complicated where you're making them think or have to try to relearn this capital structure week to week is more problematic than it is beneficial.
Yeah, no, that's a good point. And I was just looking back through the historical prices of STRC. Let me bring that up on screen here. Again, so hard to like read into all these price things, but I think it was around the May dividend, a couple business days after May 19th, I believe, that they announced the buyback of the converts, and STRC's price was still trading, after the dividend, $98, $99, which we've seen it do that, in the last few months, and then it was about almost 2 weeks later. When it really started dislocating. So I do wonder, was it the converts themselves? Was it just the USD reserve getting attacked? Was it Bitcoin's price dropping so much? It's just hard to pin down exactly. Yeah, like you said, what are the STRC investors looking at? Is there like a huge like institutional portion that's trading on the fringes that is looking at different metrics or different signals? Because I'm sure Strategies in communication, with their institutional investors, surely, who want to see them buying more Bitcoin on a regular basis. And yeah, I'm just curious about what's happening behind the scenes communication wise.
I'd imagine if I was an STRC holder who didn't have the time that we do to follow it this closely, the only thing that you're looking at in terms of determining the risk of continuing to hold STRC is how long is that USD reserve runway? And so, perhaps that was the headline that they saw and they didn't think through how retiring the converts actually affects them in the preference stack. And they're just like, I have time to follow one thing, which is how many months of USD runway do they have left? I think another thing here is like Strategy has become such a major player in the market that you have to ask yourself when looking at how it fell below par and kind of started that unwind. Is that a result of Bitcoin's price falling, or did Bitcoin's price begin to fall as a result of seeing STRC price begin to fall below par? Did they kind of self-reinforce in a way? I think it'll be really interesting now that STRC is such a big player in the market in terms of sentiment, not in terms of true buy side compared to daily liquidity or weekly liquidity, but in terms of sentiment. When something like STRC falls that far off of par, it must make a lot of people in the Bitcoin world think, oh, it's going to be a while until they reach par, and therefore a long time until they can start being a net buyer of Bitcoin, and therefore a long time until Bitcoin can be pulled out of the bear market. Maybe I go chase this AI trade for a couple months and keep an eye on STRC in the meantime.
Yep. Really good point. Yeah, I mean, it's interesting to note that the other instruments kind of have traded in lockstep too, right? We've got STRF, same thing. as soon, the converts were retired around here mid-May, mid to late May, and then the USD reserve news hit. Same thing, STRF, which is the one that's the highest in the capital stack of the preferreds, traded from about par of 100. Again down to 85. It's trading at about 90 today. So I think you nailed that on the head, Chase. Yeah, it's almost like I don't know if it's the level of sophistication, the amount of time that would-be investors are paying attention to it, but yeah, it does seem like the USD reserve is like kind of the most important thing to the holders of the preferred shares.
And this calls out the strength of Strive and the simplicity of their balance sheet, right? Because if you're a SETA holder, it's pretty easy to follow that company. They stick to their guidance. They really only have the common equity and the one preferred. And you don't, a SETA holder is not having to relearn the capital structure or see how every other instrument in the capital structure is trading above or behind it at all times. It's just like in product 101, you can build a better product, but if it's too complicated in terms of user experience to use, then it's not actually the better product. Like you could have a car that has all this great digital dashboard, but if people can never figure out how to turn on the air conditioning, they're going to ask for those analog buttons back. And that's kind of what I think is, in some ways, strategy perhaps has over-engineered, and Strive has had the benefit of looking at what out of Strategy's toolkit found true product market fit and just focusing on that.
Yeah. Yeah. Do you think there's a world, Yves, once Strategy's balance sheet does start to look a little bit cleaner, like we think that's the goal, is right? They're going to retire these converts eventually. They're going to go with that model that I guess Strive is kind of, pioneered and perfective of just having the simple balance sheet, like you said, Chase. No debt essentially, just the preferreds, providing leverage on Bitcoin exposure, and then they've got 18 months or so of dividend runway, and I'm sure they'll make little tweaks to that. Big differentiator right now is they're paying daily dividends versus the twice monthly dividends of Strategy. In a more mature market, I guess a lot of it obviously depends on Bitcoin's price, but do you see these products, SETA and STRC, competing more for the same type of investor, as Strategy's balance sheet gets cleaned up, Yves?
So I think that definitely Strategy will be looking to clean up their balance sheet, right? I mean, obviously we see, and Chase, as you pointed out, nailed it on the head, right? The simplicity of Strive's balance sheet definitely helps. And to this point, I wanted to maybe piggyback a bit on the previous discussion. I don't know if you guys saw the post of Jeff earlier, where he mentions the short interest on SETA. So I haven't done any research on STRC, but I think it's quite interesting to see the short interest. So obviously SETA is a much smaller instrument as STRC, but I wouldn't be surprised, exactly that one. I wouldn't be surprised if there were also institutions who took the opportunity of this USD reserve sale to actually start maybe entering the trade and playing games, right, with STRC. Probably we would need to do some research, but because STRC is such a bigger product than SETA, then potentially some institutions can get into trade and really do some shenanigans there. I don't know if you have any, if you guys have any thoughts on this, or if you did any exercise, but I think that plays as well, because suddenly we also saw narrative change. Obviously, Bitcoin price for sure is probably the main factor, but it feels like everything kind of came in tandem. Now we don't know what came first, but there's definitely some games being played. I don't know if there's also like X bots that are flooding the market with false narratives. I mean, it's crazy the amount of false narratives that you see nowadays, probably also sponsored by these institutions who are just shorting whatever instrument that comes across their desk. So yeah, I don't know if you guys have any thoughts on that one.
Yeah, that's interesting. So SETA, I just want to make sure I got the read right. SETA is about $780 million in notional value. And this chart, I assume, is shares. So that mean $120 million. Well, I guess a little less with the price at 90, but let's say $100 million in short interest. So that's like 13 to 15% of the total outstanding SATA is being shorted right now. That's kind of wild. That's a risky proposition if you're paying like Jeff said here, you know, the daily dividend at 13% APR. You've got to have some high conviction that your short bet is going to be right. Am I reading that right? Are these shares?
Yeah, I think
I
so.
can't tell. I haven't. This is the first time seeing this, but
Let's see here.
it does feel like there's been an unusual amount of activity in what I've kind of termed the great Bitcoin credit scare of 2026, because you know when you really break it down, Strive and Strategy are very capable of making good on their dividend obligations. They're a tiny percentage of the value that they already hold liquid on their balance sheets. So it does feel in some ways like this scare or this panic is being manufactured. And you can say that, you know, finally the Sailor and Strategy and digital credit haters had a moment to kind of resurface and assert their, you know, correctedness on the market. But it feels like so much more than that. And then we often hear things like, oh, people are engagement farming, and you could kind of call that a financial incentive. But this stuff, the short interest, this is where the real financial incentive lies for generating this panic. And it does feel a little bit manufactured, a little too convenient that the entire narrative has kind of consolidated around this right now.
Yeah, I do wonder if this is driven by, you know, someone having some info or you know, recognizing that there was probably a lot of leverage on STRC and SATA. Um, you know, so people are out there and like, oh, let's liquidate all these leverage longs on these products because yeah, you know, like being able to leverage STRC if you had a bet that it wasn't going to fall below like 95 or something, that seemed like a pretty good bet for a while. And I'm sure some people made some money who might have gotten in and out of that trade. Obviously, not advice. You know, if you want to be that degenerate, go out and do it. More power to you. That's not something that I that I can stomach. Certainly, even on a lower vol instrument like this. But just you know, real warning that you know, these things can kind of you know, depeg or depar. You know, obviously the $100 isn't a strict peg, but yeah, I wouldn't be surprised if a lot of this is just liquidation. You know, trading on the margins, high short interest. Because I think we always like even with Bitcoin, like most Bitcoin is, you know, held either in a wallet for, you know, months to years, whether it's self custody or with a custodian. You know, it's really the marginal buyers and sellers that are trading, you know, on a daily, weekly, monthly basis, swing traders who are affecting the price, right? Because you've got your Bitcoin hodlers who are sitting there and they're sitting on Bitcoin for 5 years, 10 years, and they're not providing, you know, new price information because their numbers are a lot higher. So that's, you know, with any equity, with any security, with any commodity, like we always like, I think, over determine these types of things and realize that, you know, most price action, which, you know, just happens on the margin. So just let's wrap up the talk on the 5-point plan here. So we talked about the USD reserve policy, the dividend policy, their repurchase program, their common stock repurchase program. We didn't touch on that as much, but basically strategy in tandem with announcing a $1 billion STRC repurchase program. They establish a $1 billion aggregate MSTR common stock repurchase program, and those can happen, you know, privately or on the open market. How quickly do you see this happening in the bear market, you guys, or is this something that's just you know, that they're going to ramp up as needed? Is it a signaling event again? What's your take, Yves?
Sorry, can you repeat the last question?
Yeah. Just thinking about the MSTR repurchase program. Do you think we see that happen, quickly over the near term while the stock is undervalued as viewed by management?
I don't think we do see that right away. I mean, obviously, yeah, you mentioned that it's undervalued, but I think again, they don't want to make too many changes right away. I think they've stirred the nest quite a bit recently with even again going back to the 32 Bitcoin that were sold, the depletion of the USD reserve and all of this. And I mean, obviously, if the opportunity rises where you can see really a discounted price for the shares, I could potentially see it. But I don't think we see this type of discount, at least not in the coming weeks. And yeah, again, going back to just simplicity, I think we just probably stay still a bit, and if they manage to do something, it's again actually issuing shares on the contrary, not repurchasing. So yeah.
Yeah, I don't see them selling Bitcoin to buy back STRC or MSTR. Not just anytime soon, but really in general, because strategy has to balance the accretive to Bitcoin per share that would be versus the fact that they want to own the most of the finite supply asset, and that selling Bitcoin just means they own less of the network as a whole that is finite. And so there's value to every Bitcoin that remains on the balance sheet that they've essentially burned from supply and created more Bitcoin scarcity, which drives more of the value to all of their various products. And if you think about it, in order to shore up the STRC price or MSTR price when it drops below par or 1 MNAV, you can see how on paper that would be accretive, right? If you're trading below 1 MNAV for MSTR, you sell Bitcoin at below 1 MNAV, you buy back your shares, it's accretive to your MSTR's Bitcoin per share. But if the goal is to drive MSTR price up and MNAV up, would it actually have that effect? I think it would have the opposite. I think people would panic again to see that MSTR is selling Bitcoin. They would intuitively think that this is the doom loop, that they can't stop selling the Bitcoin. They're going to have to keep selling the Bitcoin. And I actually think the net effect to MSTR price would be sending it lower, driving the MNAV even lower. I think it would have an opposite effect than actually creating accretive Bitcoin per share in the common, or same vibe in STRC. So I don't see them actually using these levers. I think they wanted to create a very thorough, updated guidance and policy set here, and so they included it. But I really just don't see selling Bitcoin to buy back MSTR or STRC as effective at achieving what its purpose would be set out to be.
Yep. Yeah, I think that's a good point. Yeah, I'm curious. Yeah, it'll be interesting to see. I don't think we see a lot of this. Was the 32 Bitcoin that inoculation we needed, to see them selling a little bit? Or are we going to see them engage in active treasury management a little bit more? I think there was a quote from Fong in the press release. Let me just pull it up so I don't misquote him. Yeah, Fong said, strategy is evolving from one-way capital issuance to active capital management, said Fong Li, CEO of Strategy. We intend to move between issuing securities when capital is attractive and repurchasing securities when our investments trade at levels that make buybacks accretive. The flexibility is designed to create shareholder value, improve corporate performance, and strengthen the quality and market standing of Strategy securities in the eyes of investors. So my initial read on that was, if I take the words at face value, I think they're going to. I think they're going to, more seriously consider selling Bitcoin. Maybe that means considering it more seriously means they end up not selling much Bitcoin to repurchase shares. But we've seen some, smaller Bitcoin treasury companies do some more active treasury management, and obviously, STRC or Strategy is just like orders of magnitude bigger than any of these companies, so they're far more scrutinized. Their investor base is far more diverse, so there's going to be totally different reactions by the market. But I do wonder, like Embry Digital comes to mind as one who was pretty aggressive about selling some Bitcoin to repurchase shares when they were trading below MNAV, and really aggressively hitting the ATM to buy Bitcoin. Ryan Lane, their CEO or founder, was on the show talking about how he's like, I come from the hedge fund world, so we're going to run our company like that. We're an operating business, and we saw them. I think it was actually earlier today or yesterday, that they've announced a expansion into AI compute and data centers. So it'll be interesting to see how that affects their Bitcoin accumulation. But I do see, I take that quote I think it was very pointed and direct that, Fong said, we are going to, do the moves that are accretive. So maybe, strategy rebounded. Chase, you mentioned 12% on Monday to the news about the new 5-point plan, their digital credit framework. So maybe we don't even get to levels where it's trading below the EV MNAV. So maybe they don't sell Bitcoin into the market to repurchase shares. But I do think it's more than signaling. I do think they're going to strongly consider it, and we could see some more, I guess, small Bitcoin sales to that effect. Am I wrong?
I'll be the first to call it here then, that even though it's accretive doing so, and I understand that, you have to think about what the headline will be. The headline's not going to be strategy sells Bitcoin in an accretive way. It's going to be strategy sells Bitcoin, right? And so I think Fong Li and Saylor and CJ, this team is incredibly intelligent and incredibly in the weeds. And I think sometimes they need to think, what is the dumbed down headline take going to be of this action? And is that headline going to create a worse market situation for us than the slightly accretive move? Even though, we could follow the numbers to a T, but if it creates the opposite effect in terms of our ability to access capital and issue more MSTR and STRC, then it's not really accretive on a longer term, on a zoomed out basis. So I would just urge the management team that I do have faith in these guys. These guys are really intelligent, smarter than I'll ever be, but they almost need to have a dumb person on the team to just say hey, what does this look like to you if we do this? Oh, it looks like you're selling Bitcoin. It looks like you're scared and you can't make good on your obligations, or you're worried MSTR is going to fall further apart, and so you're having to dump the balance sheet to try to defend it. And what happens if that doesn't work, right? So what happens if they sell Bitcoin to try to shore up MSTR price back to MNAVs of 1 or higher, but it ends up scaring the market and MNAVs fall further? Now the market's going to say, wow, they thought they had a lever to try to bring us back to MNAV, but it turns out it actually has the opposite effect. Now they can't do anything. We'll never see MNAVs of 1 again, right? So what does the other side of that move look like if it doesn't have the desired effect? Because now there's a whole new narrative, which is that lever doesn't even work the way they think it works. So like I said, I'll be the first to say that if they do that, if they sell Bitcoin to buy back STRC and MSTR, I'll be the first to say it will not have the desired effect.
Mm-hmm. Yeah, sounds like they need to spin up some sort of artificial Twitter or X environment and just say, here's what we're thinking about doing, and see all the 80 IQ takes that I have, pop up, Oh, Michael, I'll volunteer, I'll react to any of your proposed changes if you want the real 80 IQ takes. But no, it's a good point, Chase. And, while I do see both sides of the coin. I do, again, I take them at their word that they're going to try this maybe a little bit, and maybe Bitcoin's price bounces, or maybe MSTR price bounces, and it's a nothing burger and they don't even really have the opportunity to do it. But I think they're going to try it. But I see your point, right? Because over the last year, there's been some great announcements. The launch of STRC, huge, but you had the guidance about the MNAV last summer, where they said they weren't going to issue common stock below 2.5x MNAV. You had the converts, and those were met poorly with the associated drawdown of the USD reserve. And I think you're right. Like narratives are really powerful, and it's hard sometimes to forecast that. But yeah, I do hope the team is really thinking that through in a really nuanced way. Is like how is the market going to perceive this? Yeah, they almost have to like expect what the bears are going to say, right?
Yeah, well, because this is no longer a startup. This is a credit company. So you can't trade one good narrative for one bad narrative, right? Like you have to try to kill any bad narrative, anything that becomes something that would keep somebody from trusting the creditworthiness of your company. And so I think it takes on like this market leader, iterate, find your way up the mountain position to, okay, once you decided to become a credit focused company, you have to take on a different posture. And Saylor talks all the time about do no harm, right? And I would just kind of remind them that, because this is a company that could literally do nothing and sit on its hands for the next 20 years and still be probably, if not one of the most valuable company in the world, in my opinion. And so you really are at a position of strength when you come at it with this do no harm approach. Let's just be creditworthy. Let's be predictable. And I think they've enjoyed this, like, make the stock interesting, be unpredictable, keep the market's attention, keep trying new things. But once you've decided to be a credit issuance company, you've unfortunately, you've put yourself in a different paradigm, and the do no harm, the sit on your hands approach might actually be, the right move at a time like this.
Yeah, I guess a question I have, and I'll let you step in here too, Eve. Sorry to pop in again, but like that is a really good point. They're not a startup anymore. They were like this like pseudo Bitcoin startup. They've been trading in public markets for 25 years now, but since they adopted the Bitcoin strategy in 2020, I think once they hit the mainstream with Bitcoin Treasury Fever, the launch of STRC, that was their IPO moment. And yeah, communication signals, how they behave is a lot different in a startup environment from a public company. So it is like they had their second IPO. Now, you say they're a credit company, do no harm. Is there a worry that with this shift, that maybe they're not going to have big outperformance relative to Bitcoin if they are truly viewed as a credit company moving forward? Or is the amplification such of STRC just so massive, and the addressable market so massive that a credit company can be kind of cool? It can be this company that just massively outperforms even Bitcoin.
Yeah, maybe if I can come back to a couple of points from Chase and then yours, Tyler, before I answer your question. So first of all, I second Chase. So I'll be the second right behind Chase to tell the management not to sell their Bitcoin to buy the shares. Mathematically, it makes sense, as Chase pointed out. And this has been a super interesting topic of discussion throughout the whole of last year. Like with Quentin on the One Share Pod, with guests, we've discussed this, and there's been many viewpoints. And based on the latest or what we've seen on the latest weeks now with what happened with strategy, it will not work. I completely agree. This is the narrative will keep falling on its face. As soon as they sell Bitcoin, it's just going to make things worse. And I think it's also seconded by the work that Adrian Morris is doing as well on sentiment. I think it's quite clear by now that this is driving right now the price. And any mathematically logic and theoretical selling of Bitcoin and purchases of discounted shares will not work. The one thing I will premise, though, buying shares works for smaller companies. I think you mentioned Anchorage Digital. We've seen, for example, Melius do that with free cash flows. And I think that does make sense. It's better to buy a discounted share than buying Bitcoin in the market, because you're getting basically essentially discounted Bitcoin when you do that. So that's the only way to do it. Selling Bitcoin, in my opinion, no. We thought maybe strategy was big enough to be able to handle it through their different levers, right? Because they do have various levers, but the narrative is still stronger than all these levers. And I think that's what, again, coming back to Strive, like having all these people that are so well in or so many podcasters per share, they drive a bit more the narrative than strategy. Obviously, we have Sailor, but he's just one person. Unfortunately, they need to have more people driving the narrative there. So maybe that's one point as well. They need to have more people communicating out there, more faces than just Sailor, in my opinion. And then, so what was your question now, Tyler?
Yeah, I was just wondering, is strategy branding themselves? It's a bigger question. Is strategy branding itself as this credit company make it more boring? Boring by Bitcoin standards, obviously, because the goal is to outperform Bitcoin. And I do wonder if, they've pivoted away from the converts. Smart move. They've launched STRC. But is there a concern that, the predictability of strategy makes it less volatile and maybe, less investable by the broader market?
Yeah, I mean, that's a really interesting point, and I think you touched it on before, right? Because obviously they came from this like business model where they were basically selling volatility, right? And in order to do so, they were maybe a little bit more, a bit less predictable, and maybe that's something that's interesting, because that probably tells us that their mindset needs to shift a bit more on this stability side of things, right? That's one thing. And by doing so, yeah, I mean, I still think there will be very, very successful, because going back to simply the slide of Jesse Myers with the TAM of the fixed income, right? I mean, this market is huge. And when you have a product like this that becomes successful, I think they will be eating a lot of this fixed income, just in general, real estate as well, potentially money market funds one day when when STRC is more stable than what we saw over the last couple of weeks and days. So all of these, yeah, they definitely, I think that doesn't change, but yeah, the communication style probably needs to change. One thing also I will mention regarding to what they had on the framework, right? I feel like the wording is more vague as well than before, which is also good. I think less transparency in that area is also potentially better, in my opinion. I think they've been way too transparent on things that they want to do. And also, again, going back to the potential institutions coming in and doing their own thing. If institutions know less what strategy is doing, it's going to be harder to short their products and so on, right? So things like this, I think they need to learn that the market that they're in is probably not the same market that they were when they had all the converts. So definitely some lessons learned there, and I think they will keep learning as well, as we all will, right? So that's going to be interesting. So yeah, those are just some of my thoughts on this one.
And to Yves' point, which is also, Adrian Morris's point, that sentiment is really what's key here. When you think about your question, Tyler, which is, should we expect strategy to still outperform even if they're not acting like a scrappy startup and they just become this like super buttoned up, credit issuer and very little else? Well, I think sentiment is what drives the outperformance more than Bitcoin per share, because we can scream into the void all day about how, raising the USD reserve or any of these actions are accretive to Bitcoin per share. But if it's not understood by the rest of the market, then it doesn't accrue to MNAV and to STRC's ability to hold to par. So when you think about where does the outperformance come from, why would a strategy or a Strive outperform Bitcoin itself, the commodity? It would be from digital credit issuance, but not only digital credit issuance at the lowest possible cost of capital. We've seen strategies' cost of capital skyrocket in the last month. That's not good for the hurdle rate that the common equity needs to see Bitcoin outperform before the value starts accruing to the common equity. So you need the lowest possible cost of capital. You do not get that by making a lot of moves week to week. You make that by being incredibly predictable and making that fixed income investor feel safe. And sentiment to that degree and the narrative around the business, it also is what drives MNAVs. So if you think about what is going to drive strategy's outperformance of Bitcoin, it's going to be being able to issue a lot of digital credit at a really low cost of capital with really high MNAVs. And all of that is driven by sentiment more than anything else.
Well said. I think that's a great place to leave it today, guys. Thanks for helping break down the new digital credit framework that Strategy has. Make sure you check out Yves at the One Share podcast. He's got a great interview up with Michael Sullivan that dropped. I think was it this week, Yves?
Sunday, yeah.
Monday, and we've got an episode coming up. It looks like it's gonna drop tomorrow on the Bitcoin Treasuries.net channel with Chase Palmieri and the CEO of Sovana Sanjay. So stay tuned for that. Follow these guys on X, and thanks for hanging in with us for the hour. We'll see you next week on the Bitcoin